the modest rates of growth are unsustainable. So effectively, the UK economy is operating above its long-term potential. Nahed Ennasr, Fathom Consulting. So firstly, the British Chamber of Commerce have described the UK's economy as at a low ebb, with growth expected to soften further. Later in the week, the UK is due to announce its interest rate decision. So how do you assess their economic performance at present?
So first start with, we do agree at Fathom about the UK growth at the low ebb, and the only thing that is unclear is the speed of the decline. We have never believed the UK growth story, which has been consistently flagged to our clients, because the supply side of the economy was not properly dealt with, and the boost to the demand side was only going to be temporary in our views. So that's why we're a little bit quite surprised actually, by the upward revision to the fourth quarter GDP. But the current account deficit is at the all-time high, and the saving ratio is an all-time low. And together with the dire productivity data, what it confirms is that even the modest rates of growth seen through last year are unsustainable. So effectively, the UK economy is operating above its long-term potential. And we'd expect the growth rate to further decline from here. And the data published over the last 2 weeks suggests that the growth is unsustainable. So in terms of rate decisions, won't be a market-moving event this week.
Okay, well, Canada's labour market appears to be performing surprisingly well, with the latest jobs data at a healthier state than many analysts had expected, the result of which could push back the chances of an interest rate change this week. Though what are you expecting?
So, yeah, I agree. There were a couple of better than expected data. Employment, retail sales, GDP figures for January were all better than expected. And the Canadian government also having unveiled the fiscal stimulus plans, it should be enough for the Bank of Canada to upgrade its economic forecast in the quarterly monetary policy report. In terms of rate decision, we don't expect any market moving event here too, but what we'd be expecting is a potentially more optimistic neutral stance. And markets are not expecting any rates to stay on hold this week. For the Bank of Canada to be more hawkish, we would need to see more positive data continuing for longer, or for oil prices to move higher. And given our global macro views, which we are currently presented to clients, there are two cases which we might see markets pushing and bringing forward the rate hike expectations. The first thing is China doubling down, meaning gearing up their investment engine once again for the next year or two, which is a positive scenario for commodity exporters such as Canada, and Canada pushing for fiscal stimulus rather than monetary stimulus. So these two cases, you might see Bank of Canada pushing, markets actually pushing the rate hike a bit sooner. But that's only hypothesis for now.
Lastly for today, which other key economic indicators will you be keeping a close eye on through this trading week?
The big data releases will be for China. We're keeping an eye on China GDP figures for January, March for the first quarter. And it will be Centrepiece, because China has been driving market volatility this year and last year. And there are other data that we will be keeping an eye on is the industrial production in China, retail sales, and FDI. And there is another data which we are expecting to see this week, which is electricity production data in China, which is one of the main factors of our what we call the China Momentum Indicator. So it is an alternative way to look at China GDP data, which is much lower than the official data. So that is very important for us, which we'll be keeping an eye on.
Thank you, Nahed. Be sure to check back to see how these market movers develop throughout the week, and check back with Louise Macaulay for our wrap-up on Friday. Goodbye for now.